More than 70% of Las Vegas Sands revenue comes from Asia. Company's properties in Macau are going gangbusters. This April, it's going to open the first phase of Marina Bay Sands in Singapore. Yesterday, I sat down with the president and COO of the company, Michael Leven. I asked him to quantify the growth he sees from the region.
We expect the same thing as the Chinese government expects from Macau. They're predicting 10 to 12% growth, or a couple of points above the GDP levels. And the growth we have today, when you talk about 50 or 60% growth, is basically gaming revenue and gaming net win growth. That's not sustainable in the long run. We know that. But we believe we can handle 10 to 12% growth on an annual basis, even with the supply of additional hotel rooms that are coming in.
You mentioned the growth not being sustainable. You gave some more realistic levels. What about saturation? To what extent are you worried about competitors being there and how your business is going to stack up?
We're not. We're not really worried about it. In a normal environment, you'd be worried about oversupply and saturation. But you're talking billions of people in the Chinese economy and the surrounding countries that are gaining economic opportunity, as we speak. So the nature of the people in Asia who like to play and like resorts and will be made available to them because of their income growth is really very sustainable at the 10 to 12% level, just on demographics alone.
How much are you watching what the Chinese government does as far as increasing reserves go, what that does to liquidity for the average person? We've seen statistics that show that tighter money flow does influence what the VIP crowd does.
Well, I can't really say what the tighter money will do to VIP, because the tighter money really affects the real estate market, that bubble kind of thing with a lot of financing. Yeah, and I think that has some impact on VIP, but the manufacturing business in China and the allied industries to that produce an enormous amount of capital. And those businesses don't seem to be terribly affected. I watch the Chinese government, we watch the Chinese government, but at the end of the day, we know what they want for their people. It's very obvious. Their investments to Macau in infrastructure like railroads and planes and highways and bridges are spectacular. And so even if there is a slowdown at some point in time, the recovery will be there just in sheer numbers alone.
All right, so let's shift gears and look to Singapore. Marina Bay Sands, that's meant to open up in April. What do you expect as far as growth goes there?
Well, we're very bullish on Singapore, obviously, along with a lot of people. We're watching Genting's opening. We're carefully studying it from every...
Any lessons there?
Lots of lessons. We have people there all the time. In fact, some of our people were approached to say, were we stealing their people? We're not stealing their people. We're watching to see what we can do better, what we can copy, and we have a book full of reports on how the gaming is set up, what tables are doing well, what the level of play is per table, so we can predict our numbers better. As you know, Singapore is a virgin market, and consequently, nobody really knows what the totality of it will be. There's a lot of predictions, but we're very positive.
If you had to make a prediction for revenue or cash flow from Singapore, what are you expecting?
I'd expect it to be very close to Macau's level.
Talk to us a little bit about competitors in that space as well. Again, is it something that you're worried about?
We're not really there because it's a duopoly. It's Genting and us. Genting is clearly different in its feel and its taste and its marketplace. We will compete for premium players for sure with Genting, but in the rest, from a mass market standpoint and a tourist standpoint, we're very, very different.
Do you think you're doing enough upfront marketing for Singapore? I know when we spoke with Sheldon Adelson a few months ago, he said, if you build it, they will come. Does that hold true for Singapore?
I think $5.5 billion in the project is more advertising than you can possibly buy. The building itself is so iconic and the facility is so spectacular. The publicity on it will go all over the world when we open softly April, and then with the grand opening in June. It will self-market. But we have a substantial advertising and marketing budget to go along with it. But we didn't want to start too early because people have to know you're open if they're going to use it.
What about the difference between the way the Singapore government is responding to your future opening and the way that things have been going with Macau? Do you think Singapore is going to be a friendlier place to do business?
I think Singapore is going to be a more predictable place to do business. The word friendly, both governments are reasonably friendly, I mean, if you follow the rules.
Now, the Singapore project, you heard him say, cost $5.5 billion to build and develop, and it is meant to add more than $1 billion in annual earnings to Las Vegas Sands. So a big bet for the gaming company.
No question, but it could be a profitable one.